Okay, hello everybody, and welcome to the Trade Guider FX Currency Futures Mentorship course with myself, Gavin Holmes. I'm going to be joined by Tom Williams for the live trading session. So Tom wishes you all well, and I'm also here with Stevens Hahn. See, you got me going on it now. Stevens Hahn from Infinity Futures, who's a currency futures expert, and he's going to be with us today talking really about the differences and the similarities between the currency futures and the spot forex market. There's many misconceptions about the two markets, and I'm going to reveal to you today how volume and reading volume is absolutely vital to your understanding of trading the currency markets and the futures markets. So I just want to say thank you to Infinity, CME Group, educational partner, for allowing us to do this today, and I'm glad that you're all here. And for those of you that have got the recording, we are recording this, yes, and we will be sending you the PowerPoint slides as well. Yep, you'll get those. You'll get the actual slides later on this evening. So you'll get those tonight. Literally, the reason you didn't get them before was quite simply I wanted to keep it as current as possible. So I was actually literally looking and searching for charts first thing in the morning this morning when I got up to see if there was anything apparent, and you'll see why. Because the euro, as we now know, has become a bullish currency despite all the news. I'm going to show you why that is today. Hey Fiona, good to see you as well, as always. So a lot of people I recognise, a lot of new people here today. Some of you are new, you've never even, and I looked at the hundreds of people that signed up for this. Some of you have not used volume spread analysis before. Don't worry, I will give an overview of what VSA actually is. So it's only a quick overview because I'm hoping a lot of you have read. In fact, how many of you in the room have read my book, Trading in the Shadow of the Smart Money? How many of you have actually read that book? Just want to see, get an idea. Okay, so quite a few of you. I would hope so as well. Okay, great. Stephen, you're halfway? Good. Okay, good. Some of it. Okay, good. Well, thank you. And if you haven't read it, don't worry, because today, whether you have or haven't read it, is not going to make a difference to what we're going to teach you. Now, that's me on the right. My name is Gavin Holmes. I'm the CEO, and I'm also an author of 2 books, in the process of writing a 3rd book. And this is my mentor on the left. His name is Tom Williams, and he is now 84 years old. He was a former syndicate trader. He retired at 40, a multi-millionaire, and he trades the Forex and now the currency futures. He prefers, as it happens, to trade the currency futures now, and he has an account with Infinity, as do I. And if you are interested in finding out which broker we use and the platform we use, you should all have got a download of it. You can always email me, and I will connect you with one of the brokers at Infinity, and we'll pass your details on to Stevens or to Jeff, and that's my email address. Okay. So today, as I say, Tom will be with us next week for the live trading session. And I didn't get a picture of you, Stevens, so I probably should have taken one when you came in with your hat on. But Stevens is with us from Infinity, and I want to welcome him. He's an expert in the futures market, specifically currencies as well, and he's also a broker with Infinity. David, if you've got any questions about the Infinity platform, let's wait till Stevens comes in about half an hour's time, and you can ask any questions about the platform, and I'm sure he'll be able to help you. Okay, so here's the format of the sessions that we've got for you. Basically, we've got 2 theory sessions, which are on consecutive Saturdays. Today's the first one, next Saturday's the second one. They'll last approximately 2 hours, but they may overrun because we've got a lot of information for you. So we will take a 10-minute break between sessions, but as I said, it's possible that we may go on for about 2.5 to 3 hours. It is possible, so keep that in mind. I do, and we do, encourage your participation. Obviously, I would ask if you can try to keep your questions till the end, that's fine. But if you've got something that you feel would help the group, type the question in. We encourage it. At GI, we are recording these. Okay, everything is being recorded right now, and we will be making these available to you as on-demand courses in your Trade Guider customer area of the website when you log in. They will be available. This first session will be available on Monday when it gets uploaded. And then again with next Saturday's session will be uploaded the following Monday once we've edited or done any checks on it. I would say this to you, no question is a silly question. So if you don't understand something, do ask. This is your opportunity. And if you don't like to ask in a public forum, you can always email me or my brother Darren. Darren is also a VSA expert, and he is available at darrenh at tradeguide.com. He can assist you with pretty much anything to do with this seminar. Remember, I've put there, if you cannot get your question answered in this session, we don't want you to leave any of these sessions scratching your head. We want you to learn something and to pick something up. I will warn you, there's a lot of information coming your way. We're going to cover some basics. Stevens is going to talk about, what the difference is between a futures contract and a spot forex contract. We're going to talk a little bit about arbitraging. For those of you that don't know what that is, I'll cover that in this session. It's amazing how the forex markets are arbitraged by arbitrage traders, and that is why the markets move together. You very rarely see the forex markets out of kilter with the currency futures, but the difference between the two, of course, is one is traded on an exchange and one isn't. We'll do a little bit of trend channel drawing today, and we're going to focus more on that next week. So next week is going to be more to do with trend channels. Today we're going to really show you and prove to you beyond reasonable doubt, and I say that as an ex-policeman, but that's exactly what I'm going to show you today. Volume is absolutely vital to trading forex. And I'm going to talk about the misconceptions and the misinformation that's put out there in the public domain about volume not being relative to forex. That's not true, and there's a lot of very poorly written and misleading articles. I would even go so far as to say they're lies, and they're often, I think, there to mislead the retail trader because, forex is a very big business, as we'll see. It's one of the biggest businesses in the world, and there's a lot of money to be made and lost in the forex markets. And we're going to really, when I refer to forex today, I'm going to refer to it as both currency futures, which I trade, and forex. So I'm not specifically talking about the spot forex market here. We're talking about trading currency, basically. We're going to find out how the governments and the international banks manipulate the currencies. Let me just ask all of you here, how many of you believe or do not believe that the forex markets can be manipulated? Let me just ask that question first of all. How many of you believe the forex markets can be manipulated by governments, institutions, hedge funds? Well, Neil says everything's manipulated. Well, I won't think I'll disagree with you on that one, Neil. I think I'm going to be quite with you on that one. But everyone so far says yes. Yeah, okay. So that's not a bad thing, by the way. That's a very good thing. Why do I say that? I've written about it in my book. I'm not a conspiracy theorist, far from it. I come from the system. I was a policeman. And I'm taught, when I was taught to be a police officer, I was taught to question everything and go searching for answers. And everything I know about the markets, I've proven to myself. I've had some meetings with some of the biggest traders in the world. In fact, I'm going into business with the fourth largest e-mini trader in the world. We're opening a hedge fund in England, and I'm going over there in a few weeks to sign all the paperwork. And, but do these traders trade serious size? Oh, yeah, absolutely. We're talking 3,000, 4,000, 5,000 contracts at a time. And they don't put the order all in at once either. And we're going to show you today how the news will most definitely mislead you. You'll learn about trigger numbers. Now, these are really important areas. They trigger a trade. They show you when to take an entry and then when to take an exit. I'm going to show you what the playing field is. Now, the playing field, as I refer to it, is basically two lines. They're a trend channel. Michael's asking, how does a contract compare to a lot or a pip? Well, I'll save that one for you, Stevens. So, Michael, if you could ask that to Stevens when he comes in, because it's a good question, and we'd be happy to answer that then. We're going to learn what the playing field means. It's really identifying the correct ways or the correct areas to place your trade short and long in a trend, be the trend up or down. In simple terms, in a downtrending market, you place a short at the top of the downtrend channel, not at the bottom. And in an uptrending market, you place your long at the bottom of the uptrend channel. Now, that's not difficult to understand. But the problem comes is when people are trying to buy the market, they buy the rising price because they think it's going to keep going up. I'm going to show you why that is wrong. That's misleading, and that will cost you money. You want to buy on down bars and sell on up bars, as I'll show you. We're going to learn how to average, what the average daily ranges are, and we're going to show you how to manage risk-reward to try to get a maximum return on your trade. We're going to look at trailing stops, which we're going to do next week, chandelier stops, and I'm sure Stevens today will talk about the multi-bracket entries that you can use in the platform, because you can do various very clever things with the Infinity platform, which will allow you to bracket entry your trades. And we're going to show you how to do this, so don't worry if you're not familiar with that. This is one of the things you're going to learn on this mentorship program. You're going to learn how to analyze both the spot forex chart, which uses tick volume because there's no centralized exchange, in comparison with the same currency futures pair for the CME group currency futures volume. And we're going to see how both are arbitraged and how the currency futures moves in relation to give you a trading edge. And you'll see how it's quite uncanny that when the big players step in, they step into the spot forex first and then into the futures market. They have to. The two have to be in alignment. They can't be out of kilter. You can't have the futures going one direction and the spot going in the other. The same as you can't have the S&P cash going one direction and the futures going in the opposite. It doesn't work like that way. So always markets are arbitraged. There are arbitrage traders that keep the markets in kilter, in alignment with each other. And that's why the cash actually moves the future. The future does not move the cash. Let me be very clear on that. The futures market does not lead the cash market. Far from it. The big money goes into the cash market and then goes into the futures market. And we'll show you why that is. So we're going to look at how to take a trade in the exchange-traded forex market, which is of course the currency futures market, which is my preferred market for many reasons, which I'm sure Stevens will explain. One of the main reasons I trade the currency futures is A, the volume readings on the currency futures are very clear, and secondly, I'm protected through the CFTC and NFA because I trade with a registered broker, and my brokers over at Infinity are all registered with the authorities. So in the event of any dispute, I have somewhere to go if I have a problem. In the spot forex market, unfortunately, we don't have that at the moment, and there's been a lot of negative publicity and scams in the spot forex market, which is why. And the other thing, because I'm sure Stevens will tell you, in the spot forex market, the person you're trading with is often taking the other side of your trade, and he'll explain that, I'm sure. It's not beneficial. Whereas in the currency futures market, you're trading through an exchange traded contract. So we're going to learn why the reason the euro became a strong currency on January the 13th, 2012, despite the media reports end of the euro. I always tend to take media clips and keep them because, you know, as human beings, we have very limited memories. We tend to forget the past, and you know, I never do. I don't forget about the oil market collapsing in 2008. I don't forget that gold collapsed in September 2011, despite the news it was a safe haven. I don't forget the fact that the stock market rallied dramatically from August through till now, making new highs, despite the fact apparently that the stock market was not a safe investment. That's all nonsense, and I'm going to teach you to be contrarian, because that's the only way you will make money. You have to act like the predator and not the prey to be successful in these markets. We're going to gain an understanding of the interrelationship between gold, oil, the euro, and the dollar, because they are all linked. We're going to learn how to read key VSA principles that identify serious trend reversals, and I'm going to show you two of them today. Next week, next Saturday, I'm actually going to put them into a trading plan for you. So you'll go away with trade setups specifically for currencies, but all based around volume spread analysis. And then you're going to learn how to identify the highest probability VSA trade setups using my second book, which is the VSA Sequential Chart Patterns. Now, if you haven't got my second book, you can have it for free. There's no charge. It sells on Amazon. Okay, I'll put in the link here for it. You just email my brother and type in second book into the subject line, and he will send you the second book if you haven't read it, because you'll need that for next Saturday for what I'm going to talk about. That second book has got all the VSA indicators and all the dialogue boxes written into it, and I'm going to use those to specifically talk about currency trading and how we trade those sequences. So please, if you haven't got the book, you can have that with my compliments. If you haven't got it already, you will need it for next Saturday's class. Okay, so the theory sessions obviously today and next Saturday the 10th. Then we have a live market session on Monday trading the Australian dollar and the yen, which is actually the quietest of the three sessions. But when it's quiet, it still trades. And I'm going to show those of you in America that have been asking me how we actually trade the Aussie dollar and the Japanese yen. They're two of my favorite currencies to trade, the cross pairs. And I've obviously, the other thing, I've got lots of friends out in Australia now. So wanted to make sure when Fiona just says woohoo. So yes, we're going to We're going to be looking at that, but we've also thrown in an extra session that wasn't originally included in the cost, and that's going to be with Tom and myself, and we're going to do that on the following Friday in the US session that links in with the London session. There's usually some great trades here as well, and Tom will be coming in actually reading the chart bar by bar for you. So every single bar that fills in the time frame, he'll be telling you what's going on. It's uncanny as he does it. Very, very clever. So you'll see that next Friday, and that's an additional session that we've thrown in there. Just before we start, I'll just say what qualities make a good trader and investor. I mean, it's all well and good us being able to read charts, but as human beings, we have many emotions that we go through when we're trading, and there are certain things in my years of doing this now, I'm in my 11th year doing this, that make a really good trader. I wanted to start with this just so we can all focus on what our weaknesses and our strengths are, because we all have weaknesses and strengths, every one of us, whether we're trading, investing, whatever we're doing, and we've got to try and improve on our weaknesses and obviously make our strengths stronger, because that's what we're going to rely on. So here's just a few things that I think make a good trader and investor in any market. And they're in no particular order, by the way, but the first one is, of course, patience. And, you know, something that is a key one. Most traders, especially in Forex, can get into the market at any time. But having the patience to get in at the right time is going to be a key part of whether you make money or not. Timing your entry. Now, I'm going to show you multiple time frame entries and exits using different time frames. So whether you want to scalp the Forex market or swing trade it or trade it end of day, yes, in trading Forex end of day is totally possible. Okay, and you can do it with the currency futures or the spot, entirely down to you. But you can trade these things and hold them overnight. You perhaps, Stevens, can tell us what the requirement is for account size to hold a currency futures contract overnight. I'm sure there are regulations on that. Confidence, that's what you're here for today, to build your confidence up with knowledge. Study, well, you're all doing that, so congratulations to all of you for investing your time and money to be here. You know, I spent nearly £100,000 over the last 15 years in personal self-development, and that's why I'm now the owner of an international company and starting a new business next week, and I've got another book coming out. But I didn't get this knowledge just by sitting on my backside doing nothing. I had to go and invest in myself, and I congratulate all of you for taking the time and the money to invest in improving and learning more about the markets. Self-discipline, very important. You know, knowing when not to trade is something to do with self-discipline. Mastering VSA, understanding what I'm going to teach you. See, I'm nothing special. Well, I'm going to teach you today. You know, when I came into this business, I was an ex-policeman. I wasn't particularly clever. I think Warren Buffett once said, you need an IQ of 25 or above to be a successful investor or trader. I think I've got 26, so I'm getting there. But the truth of the matter is what gets traders into trouble and investors is their emotions, the way they look at the news, the way the media interact with their decision-making process. And I'll show you this today. I'll prove it to you that what I'm telling you is correct. You're going to want to do what VSA experts do. You know, as a VSA expert, which I am now, I understand the true mechanics of the market. I know the markets are manipulated. I understand why they're manipulated. And they've been doing this for hundreds of years. And nothing's going to change. The markets aren't going to change in the future. They're just going to get bigger with more participants. But market manipulation is not a bad thing at all. And it's because when the market is being moved, it's being moved by professional money. Fiona just pointed out, and the governments aren't going away. I don't think they are, Fiona, not in my lifetime anyway. The desire, the will to win, the requirement, you know, if you're here on your Saturday, you have a desire. I know that. I think every one of you here that's sitting there, out there in wherever you are in the world, you must have that to be here. Focus. Everyone's different. We all have our different focuses in life, but what you focus on, you tend to get, good or bad. There's a universal law that talks all about that. Put your focus on the right thing, and you will actually get what you want. Put your focus in the wrong thing, and unfortunately, you won't get what you want. And understanding the game with an open mind, okay? Understanding the game with an open mind, okay? And I say today, use your mind like a parachute. It's best used when you open it, okay? Belief, you must have that. You must believe in your ability as a human being to be able to make money and keep money. That's very key to anything you do in life. Don't care what it is. You hear sportsmen and women, you hear football teams. My soccer team in England, the manager went on television the other day and said, look, the reason Southampton, my team, are top and are leading the championship in England, he said, it's because I've instilled belief in the players. And that is a key thing. Belief. Educating. That's what you're all becoming today. You have a trading plan that works. Next week, we're going to talk a little bit about trading plans for Forex. You must have good risk management. Your key thing to do when you're trading your markets, doesn't matter if it's Forex or currencies or anything, you must understand, and Stevens, how important is knowing risk and understanding risk in trading?
Extremely important. I'm going to go through a risk disclaimer.
Okay, and Stevens is even going to go through a risk disclaimer because risk is everything. And, you know, Stevens is, as I say, a broker, so he sees every day traders that not only do well, but traders that blow their accounts up. And I'm sure he's in agreement with me that the last thing we want you to do is to blow your accounts up. It's no good to anyone. We are here to help you. And the CME group, of which I do educational events for, I'm also doing an event, by the way, next week with the ICE Exchange. If anyone's interested in attending that, I'll send you an email. But it's very important to have good risk management. It's very difficult to teach people that because every human being's different, but it is important. Good concentration. Okay, you've got to be able to focus and concentrate when you're trading. If your mind's drifting, if you're going through some sort of turmoil in your life and you're not 100% focused on your trading, you're probably going to make mistakes. It's very important. I spend 15 minutes before I trade meditating and getting myself in the zone. There's a great book by a guy called Mark Douglas called Trading in the Zone. Have you heard of that? Yep, good book. Talks about getting in the zone. You heard of that, Simon? Yep, good book. And very important to your concentration. Independent in thought, that means to me being contrarian, okay? And I'll show you why you need to be a contrarian. You need to be an individual, okay? It's very important. Believe the charts and nothing else. The charts cannot lie. You must understand how to cope with fear. Fear is a human response that we've had throughout time, and it's not going to go away. We have fear. The fight and flight mechanism within the human being is designed to protect us, but it can also actually cause us to freeze in a situation where we're going to take a trade where the trade is perfectly good, but your human emotion is taking control of you, and that's not going to be good for you, for your health, and it's not going to be good for your wealth either, because you might miss a perfectly good trade because you're quaking with fear. So you've got to learn to cope with that, and we've got a very good course on that particular subject. Follow the system that you are comfortable with. I'm going to teach you VSA today, which I have proven, and we have proven, because one of our customers is twice the winner of the World Cup Forex Trading Championships, where they trade real money with a real account and publish it, and Tim Raymond has won it not once but twice now. And you've all been sent a copy of that article that was written. And also, last year we had Earl Ehrenler, who came second, and he's a futures trader, and he was using VSA. So what we're teaching you works if you apply it to your personality and your style of trading. And always remember, if you're wrong in a position, if it's going against you, close the trade. Okay, so let's talk about the spot Forex and currency futures market. Now, it's the largest financial market in the world. It's absolutely massive. If we were to compare it, this is from 2010, so this has probably changed now, but it gives you an idea. The Forex market, there's nearly $4 trillion. Think of that. I mean, I can't even get my head around that number. I can't get my head around 4 billion, let alone 4 trillion, but that's a lot of zeros. So there's a lot of market participants. And of those participants, there's two groups of traders that participate every day in this market. Can anybody tell me, anyone have a hazard to guess what the names of those two types of traders are? If you read my book, you'll probably know. Two types of traders. Michael, you win. Excellent. Yeah, Michael, you very, very pleased with that. You nailed that one. Yeah, I congratulate Michael there. He came up and he said the two types of traders, Gavin, are the smart money and the herd, or the smart and the dumb money, John. Yeah, you were second. That's the two groups of traders that every single day participate in the money, in the money that's meant to be made or lost in the markets. The smart money and the dumb money is what John said. The smart money and the herd. We're going to talk about both of those groups today. I'm pleased to say that I hope after you listen to this, you won't be the dumb money. you'll understand a lot more about the market that you're going to trade. So what is actually being traded in the FX markets? People often, when we're trading a particular instrument like corn or pork bellies or wheat, we know what we're trading. We're trading a physical commodity, a physical entity. But actually, when you're trading the FX market, you're actually trading money. You're trading money. And that is what is being, we trade on these currency pairs, as I'm going to show you. They're called currency pairs. But you're actually just trading money. That's it. Okay, there's no physical delivery at the end of it. You don't physically get a delivery of your pork belly or your orange juice or your coffee. You're trading money. That's really what you're trading at a very base level. So you're not buying anything physical, and this can be confusing to many new traders coming into this market. Think of buying a currency as buying a share in a particular country, like buying stocks of a particular company. The price of the currency is a direct reflection of what the market thinks about the current and future health of, let's give an example, the Eurozone, which is Europe. When you buy the euro, you're basically buying a share in the Eurozone economy. You're betting that the Eurozone economy is doing well and will get even better as time passes. Once you sell those so-called shares back to the market, you end up with a profit or loss. So in general, the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy compared to other countries' economies. Now, what do we think the condition at the moment, everybody, is of the Eurozone? What do we think the condition is? Is it good or bad, do you think? Is the condition of the Eurozone good or bad, in your opinion? Keith came up with an interesting one. Okay. So I'm getting lots of mixed answers to this. Okay. Well, I can certainly tell you, in January, the news, and I've got the news clipping so I can show you, the news about the euro was very, very negative. In fact, if you remember, they actually downgraded some major European economies. John said, I don't think we're being told the whole truth. Because you're not. And that's what you've got to figure out. Because the euro actually has gone massively up since the 13th of January. But I'm going to show you why and how you'll recognize it on a chart. So you won't care what they tell you on the news. You don't care. I laugh, actually, because back in August, the US got downgraded. The stock market rallied and gold fell. But the news would infer that gold was the safe haven and the stock market was a poor investment. How wrong everyone is. The herd is always wrong. Write that down, stick it on your computer and put it right on there and remember it every day. The herd is always wrong. Always. Anything you're being told on the media is probably not there for your benefit. And I had a lot of trouble when I first met Tom believing that. And then suddenly, as I began to do what I'm going to teach you to do, I began to not only believe it, I began to see it every single day. The governments, the large institutional banks and other large funds will do anything they can in order to manipulate news to their benefit. It doesn't matter what it is. It doesn't matter what it's about. The herd are never completely told the truth. And in the markets, that's very, very, very true. So we have some major pairs and some minor pairs, and then we have, there's other pairs. There's many, many pairs that you can trade. But all currencies are trading in a pair against each other. Okay. Now, the ones that you'll probably all know, and the one that's been in the news recently, is the euro dollar. Okay. That's one of the main ones that I trade. I trade the euro USD dollar. You're going to note as well that most of the major currency pairs trade against the US dollar, and I'm going to explain why that is. Then we have the United States, the US dollar versus the JPY, which is the dollar yen, the JPY. Then we have another one of my favorites that I like to trade, the GBP USD, affectionately known as the cable, and that trades between the United Kingdom and the United States. Then we have the Swissy, which is the US dollar traded against the Swiss franc, very affectionately known as the Swissy. Then we have the US dollar and the CAD. That's the United States dollar traded against the Canadian dollar, also known as the loonie. Don't ask me why that's called the loonie. Maybe you'll know. I don't know that. I know why that's called the cable. I don't know why that's called the loonie. And then you've got the Australian dollar, again a favourite of mine, and the United States dollar, often known as the Aussie dollar or the Aussie. Again, a great currency pair to trade. If you live in America and you work during the day and you want to come home at night and trade anything, this and the Japanese yen are great trades in the Asian session, which starts about 6:30 p.m. in Chicago, which is 7:30 in New York. And then you have the NZD USD, which is called the Kiwi, and that's traded between the New Zealand dollar and the United States dollar. So those are what we call the main pairs. Then you have a load of other pairs. I haven't listed them all because there's too many, where you can trade the Hong Kong dollar against the Singapore. I mean, it just goes on. But the main pairs, okay, in here, okay, there it is. Michael was just, I didn't know that. The loon is the national bird of Canada. That's why it's called loonie. Did you know?
Yeah, $1 coin.
It's on the dollar coin. Okay, that's something I've just learnt today. Actually, you can take over, right? Oh, you did. I didn't even know. I didn't even know that. That's interesting. Okay, it's the loonie. Okay, so I've learned something at my own mentorship course. Okay, I'll send you all a check for that. Thank you for that. So what's the difference between spot forex and currency futures? Okay, unlike other financial markets like the New York Stock Exchange and CME Group, based here in Chicago, where I'm broadcasting from, the spot forex market has neither a physical location or a centralized exchange. The currency futures market does have a centralized exchange with its home here in Chicago. In fact, about 6 or 7 blocks from here, CME Group? Yeah. It's about 7 blocks, yeah. So it's about 7 blocks from where we're currently broadcasting from live here in downtown Chicago. The spot forex market is considered as OTC, over-the-counter, or interbank. And it's due to that fact the entire market's run electronically within a network of banks continuously over a 24-hour period. Now, I'm going to get Stevens to talk more about OTC and interbank. Just so you know, I get my tick volume, which I'm going to be talking about later, from eSignal. Okay, I use an eSignal feed, and this is a live feed that I subscribe to, and I get my tick volume from their GTIS data feed, which actually takes 200 interbank feeds and condenses it into one feed, and it's very good. I can tell you, very good. And also, when you compare it next to the, and I also use real-time data, Neil. In fact, I'm going to show you a chart with real-time data's forex data on it. It's very good, so you'll see that as well. We have another firm called realtimedata.com, and they provide end-of-day forex data, which eSignal don't provide, and I use both. If you want to be a serious trader and investor, you better invest well in your data feed. I happen to know that Infinity also provide great data, and so does, Madeline, Reuters Metastock as well as another one, but I don't think yet they're providing the spot volume forex. They're certainly doing the volume for the currency futures, and I'm going to show you why. Actually, it doesn't matter. If you want to trade, whether you choose spot or currency futures, you're going to see why the volume is so similar. Okay, Neil, gotcha. Okay, fine. So over the counter, if you've got questions on that, write them down now. If you're not sure what the word OTC means and you want an answer, remember to pick Stephen's brains when he comes in shortly. So the spot forex market is spread all over the globe. It's got no centralized location. The forex OTC market is by far the biggest and some say the most popular, and it used to be. I don't think that's quite true now because a lot of people have got burned trading in spot forex, which is why, again, I highly recommend you look at currency futures as an alternative. I even know that Infinity and many of the other futures brokers that used to do spot forex, I think I'm right in saying they're moving away from it. You don't really want to be getting involved too much with spot, is that right?
Yeah, regulators are cracking down a lot more now on forex, and there's just a lot of practices that forex firms were doing that were a little bit, illicit.
Okay.
And a lot of futures firms just want to completely stay away from that and focus on futures.
Yeah. And so what Stevens was saying, in case you didn't hear that, he's saying that there's been a lot of snake oil salesmen and skullduggery in the spot forex markets, with, and that's widely reported. And a lot of futures companies, reputable ones like Infinity, that were used to provide spot forex, they still do, but they don't really want to get involved anymore. Mainly because the regulators now are all over it. They've seen a lot of criminals basically that were ripping people off. And the reason I trade the currency future is simply because I do have that protection of the regulatory bodies, and I highly recommend you all seriously look at that as an alternative to the spot market. But that's your choice. On the OTC market, participants determine who they want to trade with depending on trading conditions, the attractiveness of prices, and reputation of the trading counterpart. The following chart I'm going to show you in a minute will show you the top 10 most actively traded currencies. As you're going to see, the dollar is by far the king of the currencies, the US dollar that is, taking up 84.9% of all the transactions. The euro is second, and then the yen is actually third. So if you look at the chart there, you'll see that actually US dollar, and then we move down from there, actually the US dollar and the euro, okay, are the two main, as you can see, the largest. But I like to trade the yen and the Aussie as well, you see, and they're up there as well, look. So I'm nearly 25%. So you can see here that we basically got the US dollar is the key, okay? The US dollar is one half of every major currency pair, and the majors comprise 75% of all trades. So you must pay attention to the US dollar. Despite all the negative news about this currency, it got stronger, not weaker, in 2011, despite the US downgrading by S&P. According to the International Monetary Fund, the IMF, the US dollar comprises almost 62% of the world's official foreign exchange reserves. Because almost every investor, business and central bank own it, they pay attention to the US dollar, and so should you. If you're going to be a forex and a currency trader, this is going to be one of the key things you're going to watch at all times, as well as looking at the oil and gold market to see what it's doing as well. So there are other reasons, not just the ones I've just given you, why the US dollar plays a central role in trading forex and currencies. Obviously, at the moment, the US is still the largest economy in the world. Although China, I think, is going to take it over if it hasn't already, but you know, they're both neck and neck. The US dollar is the reserve currency in the world. That hasn't changed yet, despite all the news about the Emira. Have you heard about that? The Emira? You don't even know what that is? This is where the US dollar and the Mexican currency were going to join, but it's not happened. I mean, it's a rumor, but it's still the US dollar. Last year, there was many fear stories put out there that Bernanke didn't want to have a US dollar anymore, so everybody began to sell dollars, and of course the smart money bought it and said, thanks very much, the dollar went up. Because the news is always inferred. But they're not going to come out on the TV and tell you what Bernanke's real intention is. Of course they're not. There's no way they're going to tell you that. Yeah.
What is a reserve currency? I don't know what reserve currency is.
The reserve currency of the world is basically you've got solid physical, like you've got gold, you've got silver, and all these instruments are traded in a currency. So the currency of the world at the moment, anyway, the main currency that everyone talks about is the dollar, the US dollar. Like you don't buy oil in pounds. In fact, I'm coming to a slide on it, so I'll show you why that is. The question came in here from Simon, why is it a reserve currency? John's just pointing out the US economy is still 3 or 4 times larger as an economy than China. But going forward 10, 20 years, we just don't know. But whatever anyone says about the US economy and where it's been and where it's going, it went into depression in the 1930s. It came out stronger. It went into depression in 2008. It's going to come out stronger. That's a fact. Don't care what anyone tells you about, all these negative stories. As an economist and a trader, I look at cycles. And at the moment, we're coming up to a 120-year Fibonacci cycle. Now, that's basically a very major cycle. And everything in life, I can assure you of this, moves in cycles. And once you study the cycles of the markets, like Wyckoff did, and like Tom does, you'll understand that there has to be bull markets and bear markets. There has to be bust and boom. There always will be, because of human nature. Everyone forgets that between 2000 and 2007, we had double-digit growths in the markets, and we've just seen again, we're heading for 1400 S&P at the moment. Now, there's money out there. The significance of the 120-year cycle, it's a major shift in human knowledge. That's what... I'm not going to get into that one here, John. It's too in-depth for a lot of people. But the cycles tell us when new information is going to come to the human population, which will change the way we look at things. And if you look at 120 years ago, and what changed to today, we have could you imagine being on this planet in 120 years' time? You would not, I mean, 120 years ago, somebody once said, let's imagine we're in a field, okay, we're on our horses, we're in one of the wars 100 years ago, and you go up to the general and you say, "Sire, don't worry about trying to communicate with your troops over in France and we're in England. There's going to be in a few years' time something called a radio, and we're going to be able to talk to them over the air." Now, I think you'd probably be beheaded, right? Because they'd think you're completely mad. So never say never. And yeah, there's a great book by Cliff Droke. Cliff Droke is the guy that wrote the book, and it's called Fibonacci Cycles, I believe, or I think it's called Market Cycles by Cliff Droke. I'm sure if you type his name into Google, you'll find it. Cliff Droke. And he talks about market cycles specifically. It's a good book. So we can see there that the dollar, as you can see, really does represent a major influence on all the other currency pairs, which is why most people trade the US dollar and other currency pairs. So important thing to note about the Forex market is that while commercial and financial transactions are part of trading volume, most currency trading is actually speculation. Even though and what I mean by speculation, it's exactly like gold a little bit and oil. Oil, we hear every week about speculation in oil. The reason oil goes up and down like a yo-yo, especially at the moment, is there's news from Iran, and that's why they're using this opportunity to say, guess what, there's no supply of oil anymore. It's a load of nonsense, it really is. And that's why prices are being forced up at the pump. Most trading volume comes from traders that buy and sell based on intraday price movements. Okay, so the Forex market is so liquid. It's constantly moving up and down. If you just look at the tick movements in the different currencies, they never sit still. They're always moving. And you very rarely see a time when the price completely stops. It's always doing something, especially in the spot market. The trading volume brought about by speculators is estimated, they say, to be about 90% of all the volume. The scale of the Forex speculative market means that liquidity, i.e. the amount of buying and selling volume happening at any given time, is extremely high, which is great when you can read and interpret volume. Because we're going to show you today why when you see very, very high volume in the right place, it's a time to get going. It's a time to get into the position. This makes it very easy. Now, it is easy, as Stevens is going to show you, to buy and sell a currency future. It's not difficult, is it? It's literally, once you understand the platform, which we'll show you, and you're going to be able to practice with this platform, it's very easy to understand. As you're going to see, in spot Forex, it's claimed that there's no commissions being paid. But of course, Stevens, can you explain why? Of course, they do actually pay in the end through the pip slippage. Yeah, you're going to pay one way, trust me, and you're going to pay through the spread. So they're going to get you one way or another. At least with the currency futures market, everything is very transparent. You do a deal with your broker and you agree a commission, and it's a straight commission. I get a very good rate from Infinity. I'm sure if you talk to them, they'll give you a good rate. Second thing is you know exactly how much per tick you're going to get, and Stevens will tell you what they are. The third thing is you've got the NFA protection, of course, which is very, very important. And the fourth thing is the speed of the platform to get your fill. The Infinity charting platform is extremely quick, and it makes a big difference when you're trading size. In fact, even if you're trading small amount of money, getting a decent fill is absolutely vital. Yeah.
It's really regarding the trading volume. Is it a complete misnomer or deliberate misguidance from the news and economists that the currency is strength or weakness is pegged to the underlying figures from the government statistics for the economy?
It's a complete lie, as I'm about to show you.
Okay.
All right. So, yeah, it's a good question. I'm going to show you how whatever you hear in the media about the underlying strength or weakness of the economy, what's in the news will totally mislead you as a currency trader. Currency do the very opposite of what they tell you it's going to do.
So there's no connection between the strength of the currency and the economy? Or is that no connection? There's certainly...
Well, yes, there is. But when they want to move it in a direction to their favour, they will put news out that would infer that the economy is very weak, when in fact it's beginning to get strong. And I'll show you exactly how that works when I show you the news in a minute, and I'll show you how it works on the chart. So the question Simon asked there was, yes, the economies of the countries are linked to their currencies, but do you actually ever get a situation where in a news-driven event, the smart money want to wrong foot everyone, and I'm going to show you how they do it in a minute. So I'm going to show you. If there's one thing you're going to take away from today, it's beware of the news when you're a currency trader. You're going to see something, I promise you, it'll blow you away. You'll go, wow. Because I trade this, so I don't listen to the news. Tom Williams really brainwashed me in some ways and said, Gavin, you've got to be an individual. You've got to stand out from the herd. You've got to be an individual. You've got to keep away from the tribe and stand out for yourself. And then you will start to see and clearly see when great trading opportunities materialize. So from the perspective of an investor, liquidity is very important because it determines how easily price can change over a given time period. A liquid market environment like Forex enables huge trading volumes to happen. And when we see ultra high volume on the spot market, you can guarantee the futures will follow because of arbitraging. Okay, and as we will see this in a minute, giving us as traders who trades the futures, if you're going to trade futures, a clear edge because the spot Forex market moves a few seconds before the future does, and especially around news-driven events, as we're going to show you, it's very, very powerful. So you've got to watch both together, and I'll show you why. So what is arbitraging for those of you that haven't yet asked the question? Basically, when we arbitrage an instrument, what's happening is the professional money, the smart money, are positioning their trades in the spot Forex market and the futures simultaneously. And I just spoke to Tom Williams about this, and he knows of a firm in England, a large smart money firm that specialise in just one currency pair, the cable, the pound. And their strategy and their whole way of making money is to try to trade the slight difference between the spot and the currency future as the market begins to take off. So arbitraging is the simultaneous purchase and sale of an asset in order to profit from a difference in the price. It's a trade that profits by exploiting price differences of identical or similar financial instruments on different markets or in different forms. Arbitrage exists as a result of market inefficiencies. It provides a mechanism to ensure prices do not deviate substantially from fair value for long periods of time. The spot FX market and the currency futures market move in harmony because of the arbitrage traders. So ultra high volumes seen in the spot market will be seen in the futures market very quickly or almost at the same time. And here's a good example. So this is the euro. Okay, it's the 13th of January is this bar here, as you can see. What do you all notice about the volume on that bar? This is the currency futures contract here. Can you all see this? What do you notice about this? Is volume at the bottom of your screen. This is activity. What do you notice here compared to all the other bars? What do you notice about that? Does that not jump out at you as something unusual? Yes or no? Yao Ming, says Andreas. Yep. So you agree that that volume is much higher than the previous 4, 5, 6 weeks. In fact, it was the highest volume for several months. Can you actually see that, everyone? I want you to, this is so important to this lesson. Now, I want you to note it's after a serious downtrend has been in place, and it's at the bottom of my downtrend channel, which I'm going to show you how to draw next week. This is what we call, I affectionately call this Yao Ming, as I'll tell you about later. And it is ultra high volume, and ultra means ultra. It means it's standing out at you. Now, the way I always use this analogy, if this was a chart of human beings and an alien had landed in Chicago in Michigan Avenue, and it jumped out, and I was the only person walking down Michigan Avenue at 4 in the morning, and the alien has a question. He says, Gavin, how tall are you? Okay, so I say I'm 6'2", which I am. So he looks at me, he says, I don't understand. But because he's not going to understand, he's got nothing to compare me to. But let's imagine that walking down Michigan Avenue is my daughter. There she is. Look, she's Olivia. She's 3 years old. And so is Yao Ming, the basketball player. He's 7'6". So there's Olivia. Let's say there's Gavin. Well, there's Yao Ming. Now, if the three of us stood together, you would then be able to say, the alien would be able to look at us and go, wow, that Yao Ming is very tall. In fact, he stands out from the crowd. So when you look at volume, which is the activity of the smart money, Yao Ming stands out from the crowd. Yao Ming jumps out at you and says, I'm here. So when you see Yao Ming volume on your charts, you better start getting excited because you're going to make some money if you follow some rules. There is no guarantees in the market. The market carries risk. When you put your money in the market, remember, you can lose it as well as make it. And I want to make that very clear. So always remember, though, if you want to get the highest probability entries, they always start with a volume bar like that. Now, that's to buy the market. To sell the market, it's the total opposite, as I'm going to show you later. So we see that, and we note the date. The date is the 13th of January, okay? That's the date. On that day, that was the news. Look at the date of the news. France loses AAA rating as Euro government's downgraded. Is that pretty bad news for the Euro? Yeah, it's terrible. And in fact, on that day, the news was very negative about the Euro. Indeed, I even heard that they were thinking of scrapping the Euro, was what we were told. So who on earth is going to want to buy into the Euro? The smart money. And that Euro just kept going. The smart money knew something that you and I didn't know. They knew that probably well in advance that the European Central Bank was just about to inject massive capital into the banking system, which it's just done last week. I'm sure you all heard of it. But that would have been known months in advance, weeks in advance. And so the professionals said, look, we know that the economy in Europe is just about to have a big cash injection. So we're going to come in and we're going to buy all these euros from all the panicking people who've just seen the headline on the BBC. And if you had switched on your TV that day, this is what you would have been hearing. I know because I've recorded it. Well, we've just heard that a major government in England, France, a major part of the euro, has just been downgraded. It's lost its rating from Standard & Poor's, just like happened in America. And because of that, there's now serious concerns about Greece. And it looks like Greece are going to pull out of the euro. Do you all remember this news, by the way? Do you remember this? So I just want to make sure everyone knows that I'm telling you what happened. The news is bad. Greece are going to pull out the euro. It's terrible news. Oh dear. Everyone should now basically get out and sell the euros. And of course, that's what happened. There was a big widespread down bar that day, as we saw. So it fell dramatically. As it begins to fall, everyone begins to panic sell. And the professionals jump in and they buy. And they say, thank you very much indeed. I shall take that from you. And this is almost what we call bag holding in VSA. It's a professional group. All the institutional money has come back in and said, well, take long positions, euro. Thank you very much. And up it goes. Now, I'm now going to show you the same day, as highlighted, in the spot Forex tick volume market. Now, what do you notice about the volume at exactly the same time, on exactly the same day, here on the 13th of January? What do you notice about the volume? Compare it to the previous few bars here, here, and here. And what do you notice about the activity on that bar? It's excessively high. Would you agree with that? Yes or no? Is it very, very high? Just want to make sure we're all... Please type in yes. Make sure you're seeing this. If you don't affirm it with a yes, I'm not sure that you're seeing it. And if I don't know you're seeing it, you're not going to learn how to make money in this. So I want to make sure you say, yep, Gavin, I can see, I affirm that you're confirming to me that in the spot Forex market where there's no exchange traded volume, but there is tick volume, there's very high tick volume on that bar, and on the currency futures market, there's very high volume at exactly the same time, on the 13th of January. And that's very important to this lesson. And there is. Now we'll go to a daily chart on exactly the same day. And we'll notice each day prior to the big, what we call the shakeout day, the volume gets higher and higher and higher on a down bar here and a narrow spread a couple of days before. Even on the daily chart, it was obvious on the end of day charts that professional money were jumping in and buying into this market despite the negative news. Do you all understand why the news is going to mislead you as a currency trader? Yes or no? Can you see from what I'm showing you how the news could completely mislead you and cause you to miss this great long trade, which is a great long trade? And that's one of the things you've got to really affirm to yourself and go, wow, that's absolutely right. Look at the volume. Look at what happens as the market falls. The volume gets higher and higher and higher as the professionals rush in and buy. On this bar, which is the highest volume we saw, it's daily volume on the 13th of January. It's a swell-in volume. The next bar, it actually closes up off the low of the bar. The very next bar, they bought so much, we get what we call a test. There's no supply left in the market, and up it goes. And it goes on and on and on. And if you were using a daily bar, a 4-hour bar, and an hourly bar, which is what I'm going to teach you to do, on that day, you would have been buying into the euro at 129. That would have been your entry on that bar right there on the daily bar, because that there was very low volume. It's what we call a test in a rising market, and it's a very strong bullish signal. Now, when you trade these, if you look at the biggest picture first, which I use the daily chart, and then you zoom down to 3 other time frames, which I'm going to give you next week, you are going to be trading in harmony with the smart money. I promise you, you will be a smart money trader. Okay, I'm going to hand the mic over to Stevens. Stevens with an S, everybody. So would you give him a big warm welcome? This is only his second webinar in his whole life. So here's your other gin and tonic, Stevens, before you start. No, he's not been drinking. I'm joking. But Stevens, just so you know, is going to take you through the all the questions that you've got about currency futures versus spot forex that is not related to VSA. Stevens is your man. He knows pretty much everything, and if he doesn't, we will basically be able to get it answered for you in the next 24, 48 hours. So, Stevens, I'll make yourself comfortable, and then just to move the slide forward, you just hit that.
Okay. Thank you.
Good day and evening, everybody. This is Stephen Hain. Thank you, Gavin, for having me come as a guest. And this is actually quite intimidating following such a good mentor and presenter. So anyways, we're going to start out with currency futures versus cash forex. And as a Series 3 broker, I am required to go through and give a risk disclaimer. So we're going to start off with that. It's very important, actually. So trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You can lose all or more of your initial investment. Opinion, recommendations, and market data are subject to change at any time. And as we mentioned, that you really want to make sure that you have plenty of risk capital for trading. And in terms of risk capital, what we mean is funds that are not going to go and prevent your retirement horizon or lifestyle, or in Gavin's case, upset Mrs.
My wife looked around. I spend anything. I upset her, so it doesn't. I can't win.
So
that is important. Though. Just tell everybody you can't trade with money that you can't afford to lose.
yeah, exactly. You really can't trade with money that you can't lose. Gavin just said that. It's a very valid point. If you're trying to, it just adds more stress to your life, and it's not dynamic for trading. Okay, so what we're going to cover today is overview of Cash FX. We're going to just do a simple background. We're going to go through like a platform, and we're going to go through the tick values of both the futures and the forex. Then we're going to overview the CME currency futures, and we'll do a little bit of a background and go through the platform. And then we're just going to actually talk about some of the benefits of futures, the liquidity and access, transparency, fully disclosed costs, speed and performance, and conflicts of interest. One of the things that Gavin did mention is that I'm both a licensed Series 3 Forex and futures broker, and I really kind of have leaned towards the future side just because of the transparency, the ease of using it. So if you do have questions, please let me know. Can anyone hear me? Type yes if you can hear. Okay, perfect. Something said that I'd lost sound. Perfect. So let's start with the cash forex. It's worldwide financial market, and Gavin had gone through this just a little bit earlier for trading currencies. It's been around a long time. just currencies in general. Like it originally, the modern system that you're looking at or that you're kind of trading with, that started out with in the 1970s. Between World War II and the 70s, there was uh, it was a different system, and actually it's called the Bretton Woods system. And that was actually based off of, that was put together after World War II, just to kind of stabilize currencies around the world and bring like a standardized system around. And back then, all the currencies were based off of the U.S. dollar, which is now where we ended up getting our start as one of the main currencies that everything is based off of. Next is that the Forex that allows for global financial valuation between goods, which is pretty standard. It's used by large institutions and investments as hedging vehicles, which is very important. Like if you, and just in terms of if a company is buying a large quantity of product in one currency, and the delivery date is not until further down the road, a lot of companies will go and hedge the price just so they do not lose out in value. Next is with Forex, it's decentralized trading with no specific marketplace or clearinghouse. And this is actually pretty important just because here, hold on just 1 second. Sorry about that. Yeah, again, we're decentralized trading and with no specific marketplace or clearinghouse. This is kind of important just because the trades are not necessarily guaranteed when you're trading with a Forex firm. And I actually have, I've had a lot of customers that have come over from different firms that were trading Forex that have complained about this. It definitely has gotten better in terms of regulations. The NFA is now coming into the U.S. with all the firms, and they're cracking down. Before, companies would actually go and they would scratch a trade. They would tell you that nothing happened. Like no trade actually appeared on their end. A lot of times because they were on the other side of the trade. The next step actually with let's see, retail Forex trading was introduced along with the internet trade in the 90s. So yeah, it was probably about 1996, I believe, that Forex trading came along. This was around the same time that currencies started to leave the floor for futures trading and kind of started trading online. At the beginning, no one actually thought that everything would be integrated online and would go as smooth as it currently is, or at least the people on the floor didn't. And now it's one of the biggest markets in the world. As Gavin was saying, there's about $4 trillion traded in currencies each and every day. Next, let's see, the retail sector of Forex, which this actually came from 2007, so it is dated. I couldn't find any statistics on what it currently is. Retail sector made up only 5% of the actual Forex volume, which that's actually a relatively small amount. When you consider the other 95% is all institutional business. So you have big banks trading money, governments trading money, and just large corporations. So if you guys have any questions, let me know. Next. All right, so this is the MT4 platform. I just kind of want to give you guys an overview. I'm sure a lot of you guys that are trading Forex are familiar with it. And here is actually the order entry system. You can select the currency that you're trading right here. You select your volume or number of contracts. And then you can enter where your stop and profit target is, and you can place your order. This is one of the other reasons why I do like futures, is because it is just a little bit overbearing, I think, especially if you're trying to get in trade quickly. It's just the general setup of it just is not as quick. And this is actually through FXSol, who is one of the firms that we raised business for. Next, we're just going to go and cover the CME currency futures. Currency futures, they were first introduced back in 1997, or well, originally they were introduced onto the floor back in 1970. It was by the ICE exchange, not to be confused with the current ICE exchange. And the contract actually did not take off. Oh, there it is. Sorry, the International Commercial Exchange. It did not take off. And then 1972, the CME released their version of the currency futures contract. And at the time, they created the International Monetary Market, which if you go to the floor today, that's actually one of the badges that you still see that people are trading with. And it started off with 7 currency futures, and it ended up becoming wildly successful. To date now, there are actually 54 different currency futures available with the CME. Not all of them are extremely liquid, and I really wouldn't... Oh, sorry, here, there's a question. All right, Michael, here, I'll get to that in just a second. Anyways, right now there's 54 different currency futures contracts. Not all of them are liquid. You're pretty much going to want to stick with the major pairs. A lot of the other ones I'd say are better for companies that are looking to do some hedging, that kind of thing. Slowly but surely, as volume does increase, these contracts do become more accessible and easier to trade. But it's just kind of like Forex as well. The spot Forex, where if you do want to go and trade some of the more obscure markets or more of like the exotic pairs, you really do end up with a lot higher spreads. And that's it's the same deal with when you're trading these spreads with the futures markets that just are not as popular. Okay, next on the list is the precursor to online currency futures you see today. So, yeah, back in 1997, that's when the futures, as I was mentioning, those came online. And today, like in 2009, 2009, the CME cleared an average of 754,000 contracts per day. And actually, somehow this ended up getting cut off. But I believe it is $100 billion that are traded on the CME. In currencies every single day. Yeah, 100 billion? Yeah. And one of the benefits of that is that it is it is pretty much the largest centralized and regulated areas where you can go and trade contracts without Kevin, can you help me out?
Yeah, it's a large,
Here, I'll get it.
The CME exchange basically is, after the spot forex market, it is the largest market for currency futures contracts. I think that's what you're trying to say, correct? And just one other point that Stevens was about to raise there, it is regulated. Now, I don't know if you talked about regulation while I've been downstairs. The regulation is the key part of it. One of the things about trading the spot forex market, and I'll ask Stevens to comment on this in a second, is that the spot forex broker can actually take the other side of your trade, okay, and that's exactly what happens. That is not necessarily a good thing. When you're trading a currency futures contract on the CME, what you're actually doing is you're trading with the exchange. Now, what you probably all are aware, the exchanges are regulated, okay? You've got the NFA, which is in the United States, and you've got the CFTC. Both of those regulatory bodies are there to protect you as a retail trader. And that has a great value when you're trading in the currency market. That's the reason I trade the currency futures. But I'll ask Stevens this question. And by the way, don't worry, I always get that when I'm my train of thought goes. But what is the difference between the spot forex broker that's taking the other side of the trade, and obviously with you guys, you're just literally, when they trade with Infinity, it's straight to the exchange. So just talk a little bit about some of the negatives, if you like, about trading with a spot forex broker compared to trading with a futures broker. That would be helpful.
Oh, so I'm actually I'm going to also go into this a little bit later, but one of the major factors is that when you trade with spot forex, A lot of times now they do have ECNs that you can go and have accounts through, but I believe it's also only about 5 to 10% of firms deal with ECNs. The rest of the firms that you deal with in Forex, they're actually market makers. So if they cannot go and have one of their other customers be on the other side of the trade, they're the ones that end up on the other side of the trade. And if you are, I've seen it actually plenty of times. I've had plenty of customers that have came over from different firms saying the same thing, that they've had relatively successful accounts, and after a while they get red flagged as kind of a high risk account because they are doing well, and then all of a sudden there's all sorts of issues. The firm won't go and pull them out of a trade because there's regulatory issues right there that are just blatant, but they will go. They'll if one of the trades it's in the green, they'll block the data feed to the platform, and they'll do all sorts of stuff just so the customer cannot be profitable.
Yeah, that's well done. Talk about as well, if you wouldn't mind, when someone's trading with Infinity and they're trading through the CME, what happens if they have a complaint or they have an issue with something that's happened, like the data feed's gone down and they've got a genuine complaint? Who can they go to?
With Infinity?
Yeah.
So, if anything happens and you're trading with us, the nice thing is that you can go and, well, first I'd like to say that we're a great firm, and we can go and help resolve all issues. If a customer still is not satisfied with the way that we've resolved the complaint, they can go to they could go and put in a complaint with the NFA, and the NFA will go do an entire review. They're a neutral party, and they're a neutral party, and they'll go review the entire situation and end up making they're making judgment on whether the firm was in the right or the customer needs to be paid. And I'm really not supposed to say this, but I think it's something like the NFA does decide more with the customer than with the broker.
That is true. All right.
Here, let's go through and answer some questions.
Okay, let's have a quick look. Actually, someone said, give me the headset.
So okay.
There's a few questions. Okay, guys, there's a few questions come in that I'm going to just cover here. Okay, so Catherine was talking about the reliability of futures trading because it's regulated. She says she's daunted, however, about learning how to negotiate the trading platform, giving instruction to enter and exit, etc. Is there a series of easy teaching videos to learn? Yes, there is, I believe, isn't there? There's a series of videos that are produced on the Infinity site. Can we pull those up later on and put the link in? Catherine, to answer your question, Infinity, the trading platform, I learned to use it by watching the videos. That's how I learned. And that is the easiest way to learn. You can do it in your own time. I think they're about 10 minutes a piece, aren't they? They're not long, drawn-out things.
Yeah, there's probably about 5 of them or 6 of them that you can run through.
Yeah.
The other thing that customers can do or prospects can do, they can actually give us a call, and we're more than happy to walk.
All right. So, Catherine, just so you know, this is the question came in. It's a very good one, and Catherine's a very long-standing customer of TradeGuider. She was concerned about how do we actually, if you're currently trading with a spot Forex broker, how do you change over and learn to trade with a completely new dome? The way that you do that is there's 2 ways. The way that if you don't want to talk to a broker, that's fine. You can just go online and view some videos at your leisure, no problem at all. I did that. And when I had questions, I then rang my broker, who's a guy called Andy. I rang Andy. He then spent half an hour with me on the phone going through my questions. And they take you into a little web room. And Stevens has just said to me, for anyone here that's not sure, he would be happy to spend 20 minutes, half an hour with you next week as one of our customers to go through with you personally how to actually place orders and stuff. I think that's very generous of his time, so I appreciate that. Does the NFA protect non-US residents? Yes, John. Yes, I thought that was the answer as well. Evan's asking account size to trading currency futures. What is the recommend? Do you have a recommended size, or do you basically say? I mean, I have a $5,000 account for the currencies to trade publicly. That's me personally, but I only do that publicly. Is there any particular size let me ask you another question. What's the minimum account size someone can have with Infinity to trade currency futures?
Minimum is $2,500.
$2,500 is a minimum? Okay.
Yes. I definitely recommend having. Well, it also depends on what kind of trading you're going to do. If you're going to do some position trading and hold through the close, you have to have what the exchange minimum is. And currently, for the British pound, it's pretty cheap. I believe it's about 2,200. Initial is 1,500, and then the maintenance, if you sink below that 1,500 level, you have to boost it up to 20.
Okay, let me just, for those of you who didn't hear that, I'll just repeat that. What Stevens is saying there is the minimum that you can actually fund an account for futures is $2,500. And in the currencies, if you're going to do that, I'm going to highly recommend you don't trade more than one lot in any. I'm just going to put that out there. That's my personal thing. When I started trading, I started with a very small account to start with, and then I build it up over time. But I don't suggest you start, if you're just learning this for the first time, a small account is better. 2,500 is a minimum. Now, if you want to hold a position overnight, so you want to hold a position on the exchange, they do have certain minimums. Stevens just mentioned to me there that it's $2,200 for the British pound, and I think it's more for the euro because the contract size is bigger.
Yeah, the euro initial to hold overnight is $4,500.
Yeah.
And then if you go below that level, you have to have $5,000.
Okay, so what we'll do, because I know you want to continue with your PowerPoint slide, but if there's any individual questions relating to your individual circumstances about how and what you should trade with currencies, I'm going to strongly suggest you connect with Stevens or Jeff or one of the guys at Infinity next week. Take 30 minutes of your time, listen to what they've got to say. They'll answer all your questions, all your concerns, anything like that. And if you want to come in with the PowerPoint, Stevens, that's great. That's good that we've got a lot of questions. Super. And anytime you want to bring me in, just shout.
Oh, perfect. Here, Sam, let's answer your question. How good is the data feed as compared to eSignal? Actually, it's a really strong data feed. It's excellent. Our developers have done a lot of work with just and put a lot of resources into having just a very strong, fast system. Like actually during the flash crash, was it a full year and a half ago now, or almost? Yeah. Yeah, that's a while ago. Like our platform was running perfectly smoothly. We heard about people with different brokerage firms that were calling us up, seeing if they could hedge a trade and all sorts of things.
It was working great that day. I was trading it. So.
Yeah. If you didn't hear that, Gavin just said it was working great that day. So, can we have Steven's email here? Let me type it in. It is.
You want to put it in here?
Sorry. Oops.
Just go backwards a couple of ticks. Is that what you were?
Oh, couple down. One more. There we go.
Okay. So click in the box now. Type.
Okay.
There you go. Just click on send and I'll send that to the audience. There you go.
Oh, there's an extra S in there, actually. It is S.
So tell them to ignore that first one. That's it.
All right, there we go. Ignore the first one here. Here's my email address.
Okay, shoot away.
Okay, let's.
Questions at the end.
Okay, let's move on.
Take a break in about 10 minutes. So.
All right, let's move on with this PowerPoint.
Click in the box. You'll learn something. Click forward.
There we go. All right, so actually, here's an example of the platform that most of our customers use. This is the Infinity AT platform, and it is actually a very easy to use platform. Unlike Forex where you have to select the price, it's just intuitive. You can click on the quantity. It'll then show up right here. Unfortunately, I can't do it live now just because there's no market. And then you can either do a buy market or sell market, or you can put in your contracts at the bid or offer, or you can just click at the price you want. And the blue column would be just to buy, and the red would be to sell. It is instantaneous. You place a trade, and right away it gets sent to the exchange, gets filled, and reported back. You normally see this happen within milliseconds. It's extremely fast. And right here, this yellow box, you'll actually see how many contracts that you have, and below is going to be your average price. Another feature that I think is great, and Gavin was talking about this earlier, was the multi-brackets. This box right here, right now it's set on multi-bracket, or on simple bracket. You can click down and you can select multi-bracket, and you can actually have 3 different preset scenarios. And you'll see down here this Group A, Group B, and Group C. And so you could have, for example, a lot of customers will have a short-term, a medium-term, and a long-term trade. So depending on what they do, you can just click whichever one. And then when you place a trade, if you have this auto-checked, the trade will actually automatically go out or the brackets will automatically go out with the trade. Or if you have it unchecked, you can always use this button down below that says Send Bracket Order. This is something that can be modified too if you want to go and adjust just where your stop is, or if you want to adjust where your profit target is. You can move those up and down. You can actually add a break-even feature, so once your first profit target gets filled, your stop loss will actually move up, and then you can do that again with your second profit target as well. It's actually a great feature. If you ever need to go and just rework your entire bracket order, or you want to change the strategy you're using, you can hit Cancel All and just replace the bracket by hitting the Send Bracket Order button. So it is actually a quite a nice system to use. It's intuitive.
We do a live session with everybody next week, an extra one with you.
Yes.
Prior to them going to the live thing. So why don't you tell them that you'll do a session especially for them, just showing them it in the live market? I think that'd be good.
Yeah, I'd love to. Gavin just asked if I would do a live session, just walking through the platform, showing everybody how to use the brackets and so forth. I'd love to do that. Okay, yeah, we'll figure this out and on what a good day is, and we'll get that out to you guys. So if you do have questions, I'm more than happy to help you out, and let's do a personal event.
Yeah, question. I've got a question about that one, sorry, but it's more about.
Actually, do you want to give them the mic?
Oh yeah, here.
Hi guys around the world. Not very often you get a chance to do this. So I was just sitting here thinking, and my question is, well, I've got a bunch of questions, but the currency futures contract, say if we use cable as an example, which is the US dollar and the British pound, I wonder if you could explain how a contract is derived and what it actually represents, and the price that it costs per contract. I know it equates into how much we make or lose per point when the market moves, and any additional fees for overnight charges.
Okay.
So, but I'd be really interested to know how contracts are derived.
Yeah, that is a good question. Yeah, here, you know what? Actually, that should be next slide. It's perfect. All right, so right now, like for when you're trading futures, here it is. You're interested in the pound. It's each tick is $6.25. And again, there's all you need in your account is the exchange minimum to hold through the close. There's no extra fees or any interest that's going to be charged if you're holding the contract, which I know that is one of the things about Forex is that you can get charged interest, and it can get kind of costly if you've got a good-sized position on.
So let me just clarify. If I hold a position overnight, I'm not going to incur extra charges depending on how much is in that trade?
No.
It's completely free, if you like, overnight.
Yes, it's completely free. Yeah.
It's one of the benefits of futures trading versus spot.
Yeah. And nice thing with futures contracts, they generally they're kind of in their prime. They're the front market, usually for about 3 months. So you can have pretty long position on before you'd ever have to go roll over to the new front month once the expiration comes up. So that is a nice feature. And realistically, if you want to get in on an earlier contract, you can always do so. Like I knew some guys from the floor that would go and enter into contracts that were full year ahead of time. And so they just hold a position for just a long time.
So if I was going to place one contract and maybe go long that market, US dollar, British pound, do you take a pool of money aside from my trading pot just to kind of cover that trade, or is that just in the stop loss?
repeat the question? That's the question.
So Simon was wondering that if he's trading the British pound and he's holding it overnight, if we have to pull funds to cover the margin, and actually the answer is no. As long as you have the enough funds in your account, it's not going to affect your it's not pulled out or it's not separate. You still have the same amount of equity in your account to trade with. Yeah.
Okay, let's just as a currency trader myself, I'll try and explain this to you. Let's imagine I've got $10,000 in my account, and I've funded the account, and I've decided to place 20 contracts long British pound. Now, two events can happen. I'm right or I'm wrong, and if I'm wrong and the market goes against me, Infinity have their own risk management system, and that system is pre-built into the platform to protect you. Now, as the market falls to a certain point, if you're not watching your trade and you haven't got a stop in, at a certain point, they're going to take you out the trade when you lose a certain percentage of your capital. I don't know what that is anymore because it may have changed. But at some point, you're going to be taken out automatically if you've gone too far. If you've got a stop loss in place, and let's say you've got $10,000 in your account, you're long the pound, but the market's gone $1,000 against you, and your stop's at 1,500. You're fine. There's no problem. You're going to let the trade breathe, and then what happens if the trade then moves back up into your favor, and then it starts to make money? Great stuff. You've never been triggered. There's no margin call required. You're in the position. You're absolutely fine. So what Simon was asking is, I think with spot forex sometimes they ask you to put more funds in and all of that. With futures, it's very straightforward. You're in a position. You've got an account size. Your broker will explain to you when you fund the account exactly if you say, hey, Mr. Broker A, I want to trade the euro and I want to trade 2 contracts and I want to trade with $5,000. What's my parameters to do so? The broker will then say, well, on this basis, if the market went against you to X amount of dollars and you haven't got a stop in place, our risk management system is going to take you out anyway, but you should be using a physical stop at all times anyway. In my suggestion is that, I don't know what you think, Stevens, but always use a physical stop in currencies because you can get black swan events. So you should always have a physical stop with the exchange. And in relation to account size, that will define how many contracts you can actually trade in the futures market. And I'll get onto that a little bit later. Okay, we've got about another 10 minutes. I'm going to take a break in a second. So, back. Sounds good.
Okay, I'm back here. There's a couple more questions. Do the futures currencies trade overnight like spot? Yes, futures do. There is a 1-hour break. It's from 4 p.m. Central Time to 5 p.m. Central Time, and the markets do reopen. And during this time, the exchange they close the exchange down for maintenance. So if there's anything that needs to be done, they can go and get that resolved. But yeah, so it's actually traded about 23 hours a day instead of the 24. Simon?
Between the time it closes and the time it opens, is there potential slippage? Is there
gaps? Yes.
Yeah, there is potential gaps. They do close the market though they try to find a time that has the least amount of activity in terms of just business and worldwide to prevent from anything major happening.
So it's in that period, is that targeted by large financial institutions to do trades potentially?
I really haven't seen much. Gavin?
No, I haven't. It's a difficult question to answer as well. I mean, with all those questions, let me come to that one at the end. I'll answer that one at the end, because that's a long answer to that question, and I'd like to do that at the end. Just a quick one. What are the commissions? They just contact you, don't they?
Yeah, if you have any questions in terms of commissions, please feel free to just give me a call or shoot me an email. We're more than happy to go and quote you. We are a discount firm, and commissions are quite low, but it does vary depending on the volume that you're looking at trading and also the margins that you're looking at using.
Is there a mini euro?
Yes, there is a mini euro, and there's also there's a list of micro contracts as well for futures trading.
Which is great. If you're starting and you want to trade real small size, that's the way to go.
Yeah.
I don't know the difference between regular, micro, and mini, all that stuff. You can explain.
Cover that in a minute. Yeah. Cool.
All right.
Okay. Let's just see for time if there's any other questions. All right, move on with the slide, and then we'll take any questions at the end.
how do we get this
just
down?
hit that.
Oh, that's it.
Yeah.
Okay. All right, so here's some of the key benefits, and a lot of these we've actually covered as we've just been conversing. Key advantages over the cash FX market includes open, transparent pricing, low-cost transaction, no premium charges, no dealing desk, no requoting, and the house is not trading against you.
That's the big one.
Yeah, house not trading against you is probably the most major. So with liquidity and access, as we mentioned, on average, there's $100 billion per day nominally traded in the daily in the CME currency futures. Again, this is one of the primary or largest marketplaces that you can go and trade without having to go through an ECN, which is multiple banks coming together, and you realistically, you have to have a decent sized account on the most part for trading on an ECN. So it's the world's largest marketplace. You'll see this. Nope, we're just kind of being pushed through. For transparency, whether institutional or retail, everybody receives the same information. This is quite important just because you're getting this exact same information as a retail customer as the large hedge funds, the banks, the government. Everybody's receiving the same information. There's no hierarchy structure or anything like that.
When you say information, what do you mean by information? You mean you're seeing the same volume?
You're seeing the same volume. You're seeing the depth of market. You're seeing how many contracts are being placed. 10 up and 10 down.
Yeah.
In terms of the bid and ask.
You've seen it at the same instant in time as the big boys.
Yes.
Yes.
You do. That's the big benefit of these futures, which is why the volume's so good.
Yeah.
You see exactly. If you're serious, when you look at the dealing desks. Sorry. Sorry, guys. The question came in there from Simon. He said, so when you're trading a futures contract and you've got the depth of market, the DOM up there, are you basically seeing what some of the big players are seeing? Well, what I do is and we'll show you this next week, when you see the large orders starting to go through, you can actually see it on the DOM. You'll see the hundreds, you'll see the 50s, you'll see the 20s. We did this, in fact, only a few days ago in the mentorship course that I did for a small group of traders. And when the smart money become extremely active, you'll start to see the 50s, the 100s, the 200 orders go through. Then you know a big move is about to build. You then know there's about to be a movement in the currency that you're trading. And at that point, you look at the volume. And the volume on the spot Forex market will also, because the smart money are moving there as well, will also increase at the same time as I demonstrated earlier. So when you see the chart, the VSA chart, in the currency futures market from the CME group, you get, in my opinion, better signals of what the currency is going to do from the CME group charts than you do from the spot. And I've seen that consistently. Customers have emailed me and said, isn't it great, Gavin, when we put the CME group stuff next to the spot, you see the two going, you see the spot start to move, then you see the CME moving, because the futures will always follow, as I said at the beginning, will always follow the spot because of arbitrage traders. They have to come in to the futures market through arbitraging because the spot market's moving. And that's a key part of this lesson and very important.
Okay, the next we're going to kind of keep moving on this is all contracts are traded in a centralized location, as Gavin was mentioning, which is the Globex, CME Globex server. It's a centralized marketplace.
It's
sorry, that's
currencies, isn't it?
Yeah, exactly. It's the biggest centralized marketplace for currency trading.
You've got trouble with that twice now.
I know.
I'm going to tell you, it's the biggest centralized currency.
Yeah. All right, we're just going to keep on skipping over that. The nice thing is about the platform, or with futures, is that you have a depth of market, and we'll just go back 2 slides or a few slides, and you can see.
Sorry, I don't know what you mean by depth of market.
Oh, so the depth of market. How do we get the mouse down? Oh, there we go. All right, so you'll see right here, these are the number of contracts that are currently being worked at each price. One of the things is that people can always pull out a trade or cancel a trade, but at least you do see what's currently working, what's in the queue.
So this is everyone's activity.
Yes.
So this is all the volume of contracts added up at whatever price.
Yes. Exactly.
Yeah. Wow. So I think we call that level 2 in the UK.
Mm-hmm.
Yes.
Yeah.
Level 2.
Yeah. So we'll just keep moving. Next is anonymity for traders, and I know this is another thing that's kind of important because a lot of people are worried about people price hunting or firms price hunting, and that does I've heard that happen with Forex where you don't know whose orders whose with futures. It's traded. The CME is a neutral party. They're just taking orders which all they have is a number for each customer. They don't actually have any sort of name or anything like that. So everything is equal party. Next, fully disclosed costs. You have a flat trading fee. One of the things with Forex, as we mentioned, is that there is a spread, and that spread can end up widening out quite a bit, especially in terms of illiquidity. That's not really something that you have to be concerned about in the futures. Just because there is ample volume in these markets, especially the majors, that it really doesn't become much of an issue. Let's see.
The flat trading fee, that's one fee regardless of the size of the trade.
It's on a per contract basis. So if you're doing 2 contracts, and it's double. Yeah.
Okay. Per contract.
Mm-hmm. Okay. Fully disclosed.
See if there's any other questions. Can we trade the Aussie dollar? Yes. Is the answer.
Yes. Yeah. You can trade the Aussie dollar, Catherine.
Keith says we can't pull up a spot Forex chart through Infinity. You can't. No, you can only do that with Trade Guider.
Yeah, I'm not sure if you guys heard that, but Gavin said that with you cannot pull up a spot Forex with Infinity, but you can do it through Trade Guider.
And how does this work with TGRT? I'm just about to show them.
Bob, actually, Gavin's just about to show everybody how the TGRT works, so he'll get to that. What are the most active high-volume trading hours in Chicago time? Gavin will also cover that? Yeah, because he trades those hours. So let's keep on moving. Speed performance. In terms of trading with like the CME Globex, you are using it is an automated system, and orders are filled literally within milliseconds. It's
too quick to notice.
Yeah, it's too quick to notice. It's fast. That's the easiest way to put it.
Best way to show that is live.
Yeah, best way to show that actually is live. Gavin was saying. I do know that can actually be well, that's actually one of the next points. Everything is first in, first out. So again, doesn't matter how big or how small you are. If you put your order in ahead of a huge hedge fund, you're ahead of the huge hedge fund, and you're going to get filled first. And hopefully that ends up working out really well for you. Next is there's no requoting, and I know that this occasionally will happen in Forex as well, where especially when customers are doing larger volume, where there's a lag or there's a delay, and they can end up getting slippage on an order.
Happens all the time.
Yeah, Gavin was saying, happens all the time.
Yeah.
Here, let's see.
Can you trade the Aussie dollars, not US? No, you must put a US dollar.
Yeah, Catherine, you actually have to trade, U.S. dollar.
You have to fund the US dollar account.
Yeah.
Okay.
Okay, and then last for speed and performance is CME actually claims that their execution reporting is significantly quicker than any other currency system out there in terms of any ECN or platform. And actually right now I believe if you wanted a direct connection with the CME, their Globex servers, they have 1,000 different locations in 85 countries that go. It's the fastest order routing possible. Next, we've covered a fair amount of this as well. It's conflicts of interest, and again, CME, it's a centralized clearing exchange. You don't have somebody on the other side of your trade that is also your broker. It's going to be an anonymous person that could be in Malaysia, could be in Australia, could be your next door neighbor. You just don't know, which is really nice. You don't have to worry about somebody trying to go and manipulating your trade. Again, we're a futures brokerage firm. Our interest is in our customers.
Because if the customer blows out, you don't make money.
Exactly. If the customer blows out, we don't make money. So the better our customers are doing, the better we're doing. We're happy. Also, there are no artificial spreads. That was the last thing, which ends up coming down to with Forex firms, you end up having an artificial spread they end up making so they can make commissions.
Can I just add something to
Yeah.
that? Just interest. Comment there. Interest, customer success. Now think about that logic. I do events with the exchanges. Okay, I'm going to be speaking with the London Stock Exchange soon. I'm going to be speaking with ICE on Monday. I speak for the CME group as well now. What's my message? Market manipulation. Okay. Now, do you think the exchanges around the world really want that message to be out there? Well, guess what? They have one interest and one interest only. They want people to stay in the market and trade. Why? Think about it. How do the exchanges make their money? They make their money through data feed costs, through commissions, which is how the brokers make their money. So why on earth would they put someone out there who's telling the truth? Well, because actually there is an interest from the exchange point of view and the brokerage point of view. Even though my message is a little contrarian, I'm trying to look out for your interests, and I know Stevens will tell you the same thing. The brokers do not want you to blow your account out, correct? There's no benefit to the broker at all, none. There's no benefit really to the exchange, and in fact the longer you trade, if you were a durable account, and you have some, I know that Andy has some accounts that are consistently durable, they consistently trade, they don't make stupid losses, they're the accounts that these brokers love. So what do they want to do? Teach you and help you to understand the market so that you don't blow your account up every week. And you do get people who blow their account up every week, don't you? Oh. so anyway, let's wrap up. We're running over a bit, so let's finish the slides and then we'll take a break. I knew this would run over, but that's good. That's fine.
Okay. Here we have a quick question. What happens what happens to trades when the CME shuts down every day? Well, actually, if you have a position on, that position remains. And on the reopen, you'll see the position on the platform. If you do have any stops or limits, the exchange will cancel them unless you unless you have what's the
So say that again.
sorry.
You're saying if you've got an order in, okay, and the CME closes for the settlement period, and the market then reopens.
Yeah.
Okay. So what happens is if you've got a stop in place and the market gaps through your stop, you're out the trade.
But like your stop is any stops and limits, those are canceled.
Yeah, and then it restarts when the market gaps open, and you have to reset your stops.
Yeah. Actually, if you do want to hold the stop or a limit through the close, there is a way to do it, but it does require a larger balance just because there is risk behind it that's associated with the broker.
I suggest they talk to their individual broker
Yeah.
about that.
Yeah, talk to your individual broker about that, and they can actually get you squared away.